Hello and welcome everyone to Gold Asset of the Day for the 25th of January 2023, presented by myself, Phil Carr, at the Gold and Silver Club. So with that, we have seen oil prices, they broke out this week to 2-month highs. In fact, we've seen the strongest close here since November of 2022. Alongside that, plenty of opportunities to buy the dips so far this week on metals that we've highlighted to you, such as palladium. So on Tuesday, palladium prices, they dropped down to $1,682 per ounce before slingshotting back to $1,740 per ounce just within a couple of hours, giving you over 600 points profit to capitalize on. Now, as you mentioned on the week ahead commodity report, we are looking at further dips and opportunities over this week to accumulate on the metals. On Monday, we had silver prices, they broke down 5% in a single session. We've seen gold prices continue to ricochet within quite a tight range over the course of this week, breaking back out to 9-month highs, but yet again getting pushed down again as we've seen the dollar pick up momentum in the middle of the week, and we've seen copper prices roll over as well during the course of the Asia Pacific session, whilst we have China on their 1-week public holidays to celebrate the Spring Festival. And with that, what we've continued to see, thinner liquidity during the Asia Pacific session. This continues to provide pressure to the downside on many metals, giving you opportunities to sniper in and build in at lower positions than you otherwise would have been able to in the last week. Palladium and silver have been a prime example of that. Some of the dips they've had over the last week have offered you fantastic opportunities to build in positions at much lower prices here, particularly on palladium, which every move back below $1,700 per ounce I perceive as a great buy opportunity at the moment. Now on oil, we are currently trading around $80 per barrel. Oil at the start of the week broke out yet again above $82 per barrel. As you know, with our clients at the Gold and Silver Club, we booked 4,000 points profit on multiple positions on oil last week. We're still keeping a lot of exposure on the energies. In fact, we're taking the opportunity just this week to build into more positions on the energies as well, capitalizing on these dips lower that we keep seeing during the Asia Pacific session in China. Now, moving into next week, we have a lot of risk-off events. We have the first FOMC statement of 2023. Alongside that, we have the Bank of England and the European Central Bank, which are scheduled to give their interest rate hike decisions. And then next Friday as well, we have non-farm payroll. This is going to provide back-to-back opportunities to yet again capitalize on the current volatility that we have on commodities. As we move into February next week, it's a new month where typically you're going to see fresh capital move back into the markets. And this week we've seen bullish calls yet again from major banks such as Goldman Sachs, expecting and anticipating huge rallies over the course of 2023 across the entire commodity complex, more specifically on energies and metals. You definitely do not want to miss out. We went through it in a lot of detail on our week ahead commodity report. If you've missed many of the moves that we've seen so far over the final quarter of 2022, where gold prices, they've moved over $300 now in the last 3 months, over a 3,000 point move, or oil prices that are broken out to 2-month highs. If you've missed out on all of these opportunities so far, you have to ask yourself, why? In these market conditions, as we move into 2023, it is the age of data. You can definitely ditch those gimmicky indicators and outdated technical analysis strategies where you'll just end up getting chopped up all of the time in these markets. It will just end up being death by 1,000 cuts, and we do not want that for you. 2023, it's the age of data. This is where you want to be utilizing data, statistics, market intelligence. Further compound that with the daily, weekly, monthly, quarterly, real-time data-driven cycles for each commodity. Learn and understand the key areas of liquidity that are targeted by the banks, institutions, money managers, and alongside that, understand the major narratives, geopolitics, fundamentals, and macroeconomics that are going to influence the markets. Next week, we're going to see back-to-back central bank news items from the Fed, from the European Central Bank, and the Bank of England. And alongside that, we've got non-farm payroll as well. So you definitely want to be positioned to capitalize from the massive moves and volatility that we will have off the back of that as we transition into the month of February. If you haven't crushed it over January, there's still time for you to do very well over this quarter. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.